All right, guys, how you doing? This is Gosha from Technical Option Traders. So let's get started with our analysis for today. Looking at S&P 500, let's look at this. Multiple days, we have down days. We are getting a gap down today as well. This is an amazing move here to the downside. If you guys watched my video from the previous day, I did talk about the possible, short position plays that were available on S&P 500. Bear flag break. We could go back for a retest of 395, but as long as this level holds, S&P 500 looks like it's headed to the downside. Okay, so if we look at the smaller time frame right now, and just to make sure that we understand what's going on here, the most important thing right now, it's broken a pivotal support level, which is right about here. Okay, and because of this pivotal support break, multiple tests, price consolidation, acceptance of the price between the buyers and the sellers, and now we have a breakdown. If we look at just a daily time frame, we look at the selling volume over the past few days has been absolutely critical. This is a big day today as well with a gap down. Market is not having as big of a reaction today, but that's understandable with the price consolidation. And we see that this level, which is the 395 to 393 level, has been tested multiple times and has been broken with confidence, downtrend line break. So multiple signals telling us that the stock market is starting to come down. Now, if we focus on this section right here, which talks about the different sectors that we have in the S&P 500. So these sectors need to be positive for the market to go up, or for S&P 500 to go up, or they need to be negative for the market to come down. So the first one that we'll look at is XLY, consumer discretionary, and we can see that even on a bigger time frame, this is a big section of the S&P 500, and this is also looking to bleed and fall down further. All right, so this is consolidating here. Can we get a bounce here? Sure, that could push the market up, but the heaviest weighted sector of the S&P 500 are these two right here, which is XLK, which is technology, and XLF. So let's start with XLK, which is tech sector right here. And we're starting to see tech sector is also in a bear flag, which makes sense if you look at the triple Q, which I'll show you momentarily. It's very in line with that, and we're looking like it's going to break down further. And this downtrend line on the tech sector is very prevalent, and it's very strong, and it's there. And the past 3 days have not been favorable at all for the tech sector. The other thing we want to pay attention to is this level right here, which is a 122. If this level breaks again for XLK, we can have a further breakdown and head towards 112 for XLK. This is something that we'll be keeping an eye on for XLK. Year to date, XLK has been an absolutely disappointment for a lot of people, but that makes sense. Rising interest rate environments have never been favorable for tech stocks. Now we look at financials. Financials are still holding on to dear life on their on their levels right now. We'll talk about that right now. So this downtrend was broken by XLF, which is great. XLF is now holding on to this level. Now, this is a huge volatile level here for XLK. You guys can see the huge price spread between support and resistance levels here, and how far they go back. It's because the banking sector is exposed to rising rates, and this is a big problem that we're having, and this is a huge chunk of SPY as well, XLF. Right now, XLF, it did go below COVID highs. Okay, so that's something that we have to keep an eye on. Okay, so in 2019 the drop was here. Then in 2020, when the COVID crash came, this was a high right here at 31, and it's tested that multiple times already. It's failing to make new highs and is headed lower. So we'll have to keep a close eye on 32. If 32 breaks, we're going to be headed towards 31. Okay, so that's something that we need to keep an eye on, just to make sure that this all checks out for us. All right, so this is something important that we have to pay attention to. So XLE was leading the S&P 500 higher, because this is a sector of the S&P 500 as well, which is the energy sector. It looks like it's starting to make a double top formation here. As if it gets below here at 81, I will be looking to take a short position and stop loss at 87. This is getting very interesting here. If energy starts to fade, that's a big section and a big warning sign for us that this is going to turn as well. So however, when energy starts leading the market, that's also also a big negative indicator for the future of stocks for the next couple of months. And as you guys can see, ever since energy's been leading, the stock market has been taking a drastic hit. So we have to be careful of this. But yeah, if we break below this level right here, which is the 81, 82 level, where energy could be headed lower. This looks like a double top setup. If we look at the monthly on energy, it looks like a triple top that's setting up. But I wouldn't be looking to play this monthly position until we get below 70 and with rising volume as well. Okay, so that's something that we have to continue to focus on. But for but for now, the overall market does look weak. Let's get into triple Q here. Triple Q looks very, very weak, and triple Q is primarily a tech sector. So this is exactly like XLK, like I showed you guys in the previous past few minutes here. Bear flag, it's still holding on. It's not breaking down. Okay, so we have declining volume though on the triple Qs right here. So we could be in for a pullback here on the triple Qs up to 282 and then maybe a further move down. But if I'm going to get bullish on triple Q, I want this downtrend line to break and get above 305 to 314 and then continue to focus on that. But for now, the triple Qs are very, very bearish. Looking at the small caps, unfortunately not so favorable as well. They've broken down multiple levels here. If we look at small caps, downtrend line is broken. It was holding this bull flag formation that it had going on, which is a trend within a trend. If this bounced up above this downtrend line, broken out of this 187, we could have been headed higher. Unfortunately, it did not. So this trend within a trend failed quite nicely. Now it's headed a lot lower. I'm still bearish on this. As long as we stay below 187 to 188, we'll be all right. And that's something that we'll continue to watch over the last couple of days. Now, something that's interesting is if you guys look at all the sectors in the market, they're all red, followed by the VIX. The VIX is falling, so this is not normal. So when the VIX is falling and the sectors are falling with it, I'm very cautious of that because it should transact the other way around. When the market is falling, the VIX should be rising. When the market is rising, the VIX should be falling because people have more confidence. So this is right now making no sense to me personally. I would like to see the VIX below 18 and then and a confirmation below that would solidify that there's fear out of the market right now. VIX is holding up really, really well, which is a confirmation for me that fear has not been lifted out of the market. It's still very prevalent, and that's something that we have to be cautious about. Now today, looking at the yields, the 10-year and the 5-year are up on the market today, and the 2-year is down. That's actually a decent sign. We want to see the 2-year start to come and the yield inversion that is existent in the market today to kind of like shape itself back down. So right now, that's something that we'll continue to monitor over the next couple of days. So looking at gold here, gold is in consolidation and it's in this little area. However, if you watch my previous videos, I did mention this level on gold where there's a huge selling that happened here in gold. That's something we want to watch for. Today's the bounce back day for gold, which is all right. Still between two levels, nothing significant happening for gold. If it's going to break out, we want to see it above 172. If it's going to break down, we want to see it get below 157. It could push down to 150, but this is a big trigger level. If this fails, this weekly or monthly even cup and handle pattern will have failed. If this breaks below 146 with rising volume, that means gold's thesis for going higher has absolutely been crushed. All right, guys, so that was my analysis for today. But before we go, a quick little new section that I'm starting today is I'll start doing some stocks as well towards the end. So today's stocks that I'm going to cover are going to be Tesla is one of them. So Tesla analysis that I have here, if you look at Tesla, Tesla has been crushed multiple times, right? This was a big level on Tesla. As you guys can see, multiple tests, a final breakdown, and that happened with a fake out to the upside. A lot of people who were bearish here got trapped and then got out, and then it continued to sell off further, right? And if you guys see, the volume on Tesla has been absolutely rising. This is due to Elon Musk that's been selling. But if we look at this level on Tesla, Tesla is trading back at the 2020 level. So it's given back about 2 years of gains. And that's something that it's quite significant. Tesla is a big portion of the S&P 500, and that's something that we'll continue to watch. It's below this trend line that we have here, and it's looking like it's headed towards 116. But I would be very cautious and watch for Tesla what happens next, and it could be headed towards 74 double digits after its multiple splits that it's had. So that's Tesla's analysis for now. If we look at a smaller time frame on Tesla, this is a 156 remains a big level. If it gets above this, we can have a bounce back to 166-ish, but we'll wait and see, and we'll wait what happens with that. Apple. Apple is a big leader for tech and the S&P 500, a lot of these markets, and this is in a long distribution, right? You can see Apple has kind of been going nowhere with this current price level, and this price level has, been held up since 2020 as well, right? So all these stocks giving up 2 years of gains, right? For a lot of these big pictures, and as we can see in a trend, there's a couple phases. You got accumulation, you got public participation, then you got distribution, then you got capitulation. So right now, public participation is clearly evident right here, and now this is distribution. And if we do break below 131 and we head towards 116, we could be headed towards a capitulation, which makes sense that further decline in the stock market is there as interest rates are rising and we are hearing the Fed use the terms of a recession. So we'll have to continue to watch this price level at 131. If it does break, we'll head towards 115 and 116. Okay. Boeing has been doing significantly well compared to all these other stocks, however, but I do mind caution on Boeing. Which is right about here. So as you guys can see, this is a trend that's starting to fade a little bit. Volumes declining. This was a huge push in Boeing. So I would be waiting for Boeing to have some sort of retest of 173 before pushing back higher. And as you guys can see, Boeing itself is in a big downtrend that's been holding up Boeing for quite some time. So and this level has held again, right? So you guys can see that, and this goes all the way back till 2019 peak, and then it continued to break down. So, Boeing can start to accumulate here because you guys can see it's tested its lows again. Recently in 2022, so we can see Boeing accumulate in these levels. But if it does get above 195, we can have a quick run up to 224. So pay attention to that and pay attention to the volume in Boeing. And this could happen with sentiment that things are opening up, more countries lifting the restrictions, and in that sense, it could be a big play. Microsoft is also another big one that's been hurt over the years, especially the last 2 years. It's continuing to break down. It's going to retest this trend line. It failed, and now it's pushing back down. A big level on Microsoft right now remains, which is right about here at 233, 230. If it breaks down below this, we're headed back to 220s. Okay, so Microsoft, big levels coming up. Unfortunately, nothing favoring these big leading companies. That used to lead the market before. Everything in a bear market is headed towards negativity for them. So this is something that we do have to be careful of when we're trading these stocks. You got to understand the environment and what we're in. There's a lot of volatility that's out there, so be careful when you're trading it, guys. That's all my analysis for today. I'll be coming out with more stock analysis in the future. If you guys like my video, please like and subscribe to the channel.